Good evening, my dear student. So today I am going to discuss about the process costing chapter, which is your module 4. In module 4 there are three chapters. There is job costing, another is process costing with loss treatment, and process costing with joint product and byproduct. These three chapters you have that I have already written here. Module 4, okay. Job costing and process costing. Job costing we have already completed in the last class, and process costing loss treatment today I am discuss about it. Then joint product and byproduct of process costing. So let us come to understand what is the process costing. When a manufacturer going for the production, he will produce a finished product by some different process. It is not prepared directly with one activity. It will passes through a like this. I have done one diagram. First, the manufacturer have to take the raw material, and that raw material should be entered into one process. Suppose process 1. So in this case, manufacturer following three processes: process 1, process 2, process 3. So raw material first manufacturer have to taken as a input in process 1, and in process 1 they have to complete one process and get some level of production activity. After that, when process 1 is complete, that raw material, that again work in progress, this part is coming under, this three process is coming under work in progress. Why it is called work in progress? Because work is going on, it is not completed till the finished product. So in process, output of process 1 should be input of process 2. After getting the finished product in process 1, that should be transferred to process 2. After process 2 completion, that should be transferred to process 3. After process 3, we get the finished product. Okay. So here in costing, process costing, we already learn about what is costing in the different chapter in the previous chapter. Costing means evaluation of cost. Costing means evaluation of cost. Process costing, that means what is the cost should be incurred in a particular type of process, that you have to determine in this chapter. Look at here. Here the manufacturer following three process: process 1, process 2, process 3. That means the total cost of a product should be determined by adding the cost of process 1, cost of process 2, and cost of process 3. These three process cost should be evaluated by the different cost sheet of that particular process. For process 1, we have to prepare process 1 account. Similarly, in process 2, I have to prepare another account, that is called process 2 account. And in process 3, we have to prepare another separate account, that is process 3 account. You understand? So every process, each and every process, we have to follow different account, and the input of this and different type of cost should be recorded. That means all expenditure in this process we have to record it in the debit side. In debit side, you have to record all expenses, and that cost should be carried forward to by this process 1. You have to write like this: by process 1, and total cost you have to put here in the amount column. Similarly, that cost should be input for the process 2 account. It is the opening stock of process 1. Okay. Then again that expenditure which should be incurred in process 2, that you have to add here, and the total amount you have to determine, and that should be by process 2 cost. Okay, that you have to put here. Similarly, that amount you have to taken as opening in the process 3, and the total amount you have to again expenditure should be incurred in this process 3, then that should be carry forward to the balance, carry forward as a balancing figure, and that cost is known as the cost of finished product, cost of finished goods. That cost is known as cost of finished goods. Okay, let us understand how this account will be prepared. There is a perfect format. I have already studied what is the ledger account. These accounts are known as a individual ledger account for individual process. Okay, so there is a format. I will give you the format. Let us understand. The first you have to understand the theoretical aspect. This is the concept of process costing. In process costing you have to follow the accounts like this. This is all about the concept. First, in process costing, first raw material entered into a process, and the output should be transferred to the another process, and again expenditure should be incurred in that process. After that you get some amount, and that should be opening stock of the opening cost of the next process. Then again there are some expenditure should be incurred, then total cost should be determined. That cost is known as finished product cost. That is the overall concept of the word process costing. Let us understand what the book language is saying. When product or material has to pass through the different stages, process and departments are cost center or machine before it becomes sellable or a finished product, the system of costing applied to calculate the cost of production per unit at each stage or process. Each stage we have to determine the cost of production or process or department is known as process costing. Okay, so this is the meaning. What is the process costing system? Then what is the definition of CIMA? CIMA, Chartered Institute of Management Accountant, London, defines process costing as that form of operation costing which applies where standardized goods are produced. That means where the standardized product are produced, in that sector we are following what? Process costing. In job costing we have to prepare the product as per the customer specification. There is no standardized things. But in automobile organization, or we have the information here that I will go later. So in standardized organization, or in manufacturing organization, whereas one standard is follows for the production activity, in that case we have to follow process costing. Okay, so what are the characteristics of process costing? Raw material has to pass through series of process before the converting into finished goods. Finished goods before conversion of finished goods, we have to process the raw material through different process. The product of a first process become the raw material for the second process, and the product of third, and so on until the finished goods. That means the raw material first is input for process 1, the output of a process 1 is the raw material for process 2, and the output of process 2 is the raw material for process 3, that they are saying. Then the next is the raw material processed through pre-planned series of processes. Pre-plan, that means planning must be done before passes the raw material through the processes. So many products are produced with joint product and byproduct. These joint product or byproduct accounts separately maintained. You have to maintain separately. Okay, in process cost account that should not be included. The cost of each process can be calculated by dividing process cost by the number of unit produced in that process. Okay, so unit cost. Suppose in process 1 we have input some raw material, some expenditure should be done, and the total cost of this process, cost means here we have to calculate the total cost is suppose 1 lakh rupees, and the output is suppose 1000. That means you have to divide it. 1 lakh divided by 1000, 1 lakh divided by 1000, that means 100 rupees each. the cost of production of a process 1 for each unit is 100 rupees, and that is the unit cost that should be a raw material for the process 2. Okay. Then next,